Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries hidden within corporate filings. And tonight we're looking at a brand new line of credit that might just be a lifeline for EC Open Infrastructure Company LLC. Let's dive in and see what this really means for them. Before we dive too deep, make sure you are subscribed to the channel. We break down these dense financial documents, so you don't have to. And if you want to join a community of fellow corporate explorers, our Discord is linked in the description below. So this is a current report from ISQ Open Infrastructure Company LLC filed on the 17th of December 2025. It tells us about some pretty significant recent events. The big news here is that on the 12th of December 2025, ISQ Open Infrastructure Company LLC, which they call the company and some of its subsidiaries, entered into a credit agreement. This is basically a way for them to borrow money. This credit line is for up to $60 million. That sounds like a lot of money, right? But it's important to note it is unsecured, meaning there isn't any specific company asset backing it up directly, and it's uncommitted, meaning the lender isn't obligated to provide the funds under certain circumstances. And who is providing this money? Well, it's I² Capital LLC, a company that is actually related to ISQ Open Infrastructure Company LLC, essentially an affiliate. This looks like a deal within the same family of companies. This line of credit isn't around forever. It is set to expire on the 15th of April 2026, but there are options to extend it for another 6 months. However, that extension needs approval from the lender. Now let's talk about the cost of borrowing this money. The interest rate is a bit complicated. It will be based on what a third-party lender would offer. Or if that's not available, it will be the secured overnight financing rate, which is a benchmark interest rate plus an extra 2.25%. So it's tied to market rates plus a bit extra. When do they have to pay this money back? Well, it's pretty flexible. They have until the 10th business day after the end of a month to pay it back, either if the lender asks for it back or when the expiration date arrives. What happens if they have money left over after paying back what they need to? Well, they are expected to use any extra cash to pay back this loan. However, there are a few exceptions. They can still do things like buy back their own shares, which is a way to return value to shareholders. If they've decided to do that already, they can also close on acquisitions if they had planned them before the lender asked for the money back. They can also make certain distributions to shareholders up to the amount they paid in the last quarter and of course pay their taxes. So while they have to pay back the loan, they still have some flexibility to manage their business and return cash to investors. And if a specific borrower subsidiary pays back their portion of the debt completely, they can then exit this credit line. Like most credit agreements, this one has standard clauses for what constitutes an event of default. If something goes wrong and they default, the lender can demand immediate repayment of all the money owed and take other actions to recover their funds. But in some cases, there might be a period to fix the problem first. This is a really crucial point, even though this is a line of credit for ISQ Open Infrastructure Company LLC and its subsidiaries. If things go south, the lender cannot go after the general partners, investors, or the company itself for the money owed. This is often referred to as non-recourse financing, essentially limiting the lender's ability to collect from other parts of the organization. And here is the actual agreement filed as an exhibit. This is the formal document detailing the terms of this $60 million credit line. So what does this all mean? Well, ISQ Open Infrastructure Company LLC has secured a significant amount of potential funding that can be accessed as needed. The fact that it comes from an affiliate I² Capital suggests a supportive internal financial structure. It's likely intended to provide operational flexibility for growth or to cover short-term needs without the company putting its core assets directly on the line. The non-recourse nature significantly de-risks the parent company from this specific borrowing arrangement, protecting other parts of the business. However, it's important to remember this is an uncommitted line of credit. While it's up to $60 million, they can't guarantee. They'll get all of it if certain conditions aren't met or if the lender decides otherwise. The relatively short expiration date of April 2026 also means they need to be mindful of its renewal or securing longer-term financing. Overall, this filing shows a company proactively managing its financial resources by securing a flexible credit facility. It signals a potentially strategic move to ensure liquidity and operational capacity. We'll be keeping an eye on how they utilize this line of credit and whether it contributes to their growth plans or helps them navigate any upcoming financial challenges. Alright, that's our breakdown of ISQ Open Infrastructure Company LLC's latest filing. What do you think about this new credit line? Are they smartly positioning themselves for future growth? Or is this a sign of potential financial needs? Let us know your thoughts in the comments below. If you found this analysis helpful, hit that like button. And subscribe for more corporate insights. Don't forget to join our Discord community. It's linked in the description for more discussions. Thanks for watching. See you next time.